Good afternoon. This is Al Espinor with Century 21 Select Real Estate of Stockton. Happy New Year 2023 with my special guest, Mr. Alex Pallios of Scenic Oaks Funding, loan originator, here to talk about the buy down rate of the interest rate.
Hello,
Hey,
Al.
Alex.
Thank you for having me. Happy New Year to everyone that's out there and watching.
You're very welcome, Alex. So go ahead and talk to us about today's topic.
Yeah, let's get into it. So Al and I were talking about, this is something that comes up quite a bit now with buy downs. Basically something that you could do to try and lower your monthly mortgage payment, whether it's temporarily or permanently. Getting into that, basically two different types of buy downs. So you have what we call a permanent rate buy down, which basically means at closing, you are going to pay for a lower interest rate. You can take a higher interest rate at less of a cost or no cost, sometimes even a credit towards you at closing. Or you can take a lower interest rate at more of a cost, thus lowering your monthly payment. Now, for example, if someone's using an FHA 30-year loan, they buy down the rate to 5.5%, whatever it may be. That will be the rate for the next 30 years or until that loan is paid off. On the flip side, this is becoming much more popular now, as Al has pulled up on the screen. Temporary rate buy down. So we have, most common ones, you have a 2-1 buy down and then a 3-2-1 buy down. I think right here we have a 2-1 buy down. So for this example, let's say, you find a home, $450 purchase price, you put 5% down, your loan amount is $427,500. This is just for example purposes, but let's say that the start rate on that is 7.5%. A 2-1 buy down, the first year of that mortgage, of you owning the home, your rate will be 2% lower than the start rate. So it will be 5.5. The second year, it'll be 1% lower, or 6.5. Years 3 through 30 would be at 7.5.
Got it, Alex.
It has to be paid by the seller. So, we have to have a conversation about a seller credit and find a property, right, Al, that, would allow for a seller credit.
Correct.
But just as you can see here in this example, year one, you save $561 a month. Year two, you save almost $300 a month. That's savings of $10,000 over the first 2 years.
Wow, that's amazing. Let's go into the next example.
Next, we got a 3-2-1 buy down. Now, this is a little bit more aggressive. It requires, a larger seller credit because, again, this has to be paid by the seller. Basically, they're just paying your interest in advance, in a sense.
Yeah.
Same scenario here. We have a 10% down payment, so a little bit less of a loan amount, but 7.5% would be the start rate. Year one, scroll this down. Year one, Al, if you want to scroll that down just a tiny bit. Year one, 4% lower, so you're at a 4.5% rate, and a 5.5% rate, 6.5% rate. The savings over that, once this is adjusted, can be pretty significant depending on what that loan amount is. Just in this case, you're looking at almost $20,000 over the first 3 years.
Mm-hmm.
And not to get too in depth with this, but this is sort of a plan. We have higher rates now than we did just a year ago. That's due to higher inflation. Inflation will eventually, it's already started to maybe, slip the curve and start to come back down. Al, you can also emphasize on this. Once we see inflation start to settle even further, we will see lower rates in the future. That could be 6 months, it could be a year or two. But that might be an opportunity for someone that uses a program like this to temporarily have a lower payment until they can refinance back into a 30-year fixed.
That's great, Alex. That's great. And again, to our audience, these are just examples for a more personalized evaluation of this program that fits your needs. I would urge you to contact Alex Pallios of Scenic Oaks Funding. Let me bring up his information, his contact information here.
Let's see it, Al. Let's see it.
Let's see it. There it is. Alex Pallios of Scenic Oaks Funding, his direct line, 209-202-0600. His office, 209-491-3815. And just to add to what Alex was talking about, and again, this is the time. Right now, there's not a lot of activity out there. if you're a buyer and you want to take advantage of the opportunity to negotiate your terms, perhaps get this, get that huge seller's credit, be able to negotiate repairs, negotiate price,
Get a deal.
everything's possible as long as, we have a seller on the other end that's motivated and willing to sell. And the ones that are out there, if they're willing to sell, they'll work with you. So I urge you to contact me as well so we can get started. And anything else to add to that, Alex?
I think that's it, Al. That was a very brief, like you said, discussion or just overview of options as far as a lower monthly mortgage payment. Like you said, for someone has additional questions, please call Al, call me, reach out to one of us. We can go over it in further detail because there's a lot more to go over.
Super. Well, hey, Alex, thank you for your time. Let's have a positive, wonderful 2023 and kick this year off on a great note. And again, we're here to serve you. Alex Pallios from Scenic Oaks Funding, Al Espinor Century 21 Select. Thank you.
Thank you, Al.